Let's turn our attention now to how markets fared early on this morning in Asia, mostly rising today, pairing some of the previous day's painful losses as investors welcome news out of China that top trade negotiator will lead a delegation to Washington this week. That's despite Donald Trump's threat to hike tariffs. Now, equities across the region were hammered on Monday, led by Shanghai's worst losses in 3 years, after the president's warning fueled by frustration at slow progress in those talks. A mixed day of trading in Asia amid those tariff talks, of course. And as you can tell, the Nikkei falling 1.5% there to 21,523 points. The Hang Seng, however, did manage to move 0.4% higher there by close of trade, still below 30,000 points. But the Shanghai Composite 0.7% to the good, 2,926 points. U.S. stocks fell on Monday after U.S. President Donald Trump threatened to raise tariffs on Chinese goods, though he paired much of their early losses as healthcare shares rose and some investors remained confident that's because of an eventual trade agreement that is expected. The Dow Jones Industrial fell 0.25% to 26,438, with the S&P 500 losing 0.45% to 2,932. The Nasdaq Composite dropped 0.5% to 8,123 points. Now, the most significant matter, of course, of late has been Donald Trump's tweet saying that, sorry, they will not do this anymore. They will not continue to lose to their Far East counterparts, that's China, when it comes to the story, of course, of how things fare with their trade agreement. Donald Trump frustrated at the situation and how slow it is going with regards to negotiations with China and the U.S. trade war, and saying that by Friday, he would most likely add on to the tariffs that are with regards to China himself, going from 10% now to 25%. But is that just a negotiating tactic? We'll wait and see. On the back of that news, most of Europe is sitting in negative territory. And as you can see, even the FTSE 100 going down there to 7,311 points. So a sense of negativity coming through on that front. When you turn your attention as well to the South African market, you also find a sense of negativity has come through, especially even today. And even though we had tested at 59,000 point mark level and gone beyond that, we had hoped that things would perhaps fare a little bit better. We are still looking to perhaps salvage all the losses from last year. We still haven't done that as yet, but there is still the hope of that. Industrials and financials going down. Industrials were the biggest losers yesterday. Of course, Naspers suffering on the back of that China story, and that was certainly going to hurt them quite significantly, falling 3.3% yesterday. Checking in as well on the rest of the indices as well. The resources going up, so too is the gold counters, while the platinum stocks are up there as well, 32.80 on that front. Very quickly, let's check in on the commodities picture. And it seems that things perhaps are a little bit mixed as well on this front. Gold and platinum headed higher, but oil, look at that oil price. Now it's $70.65 a barrel, certainly a much better picture. Let's remember, of course, that the Iran sanctions have indeed come on board, but the United States has also increased their oil production to a record 12.3 million barrels per day. That's their highest as well ever. So that situation continues to be fluid. And a quick look then at your currencies as well, very quickly. 14.44 for a US dollar, 18.89 and 16.17. Of course, a weaker stance on that front. So let's unpack that market picture now and see exactly what it is that's shaping markets. Bright Khumalo, portfolio manager at Vestag Asset Management, joining us now. Bright, thank you so much for the time. But the market itself has been, I think, probably the most difficult time is just the moment Donald Trump wakes up and realizes something is wrong with the world. And Monday was that day.
Yeah, look, you know, it was a very interesting weekend because you had Friday with the jobs number, you know.
Yeah. A very positive one at that.
Exactly, lowest in about, 64 years, something stupid like that, which is good for America. And then Trump was like, no, I don't want that to be the center stage of the news. I just want this trade war to end. And it's, you know, it's giving Xi Jinping a nudge to say, hey, look, buddy, come to the table.
Yeah.
Now.
You think this is just a negotiating tactic? I mean, he's just pressurizing him, right?
No, but he has to do something to force, you know, Xi Jinping to come to the table. And this is one of his tactics to get him to do so. But I mean, $325 billion US dollars and a further $200 billion US dollars on, you know, on goods that are being imported to the US is a lot. It's going to hurt for China, but how long can China, hold off such things?
Is China the only? Will China rather be the only losers in this scenario? Does it not really change things with regards to the way people deal with the United States from here on?
Well, I mean, the biggest loser, I've always said when I come to a show, it's the consumer, right? Because they have to pay more for the same goods they used to enjoy at a cheaper price. Your iPhone was $1,000, at 35% is going to be, 1,000 something. It's
now
insane.
you can come to South Africa and buy that iPhone.
We've got our own problems because we have 50% on top of everything else. So we've got our own problems. We're not, the cleanest shirt in the hamper, unfortunately.
Yeah. What about that oil price then? I mean, that's bound to, it's been the story that's continued, and even now with these fears, that's bound to hurt it a little bit, I suppose. Going down to $70, and as we said there, $70.65, we're definitely happy. But the oil exporting countries themselves will certainly not like it at that price.
Yeah, well, I think this only just works for the US, to be quite honest with you. If I had the power to, control the oil price like, the US has, you sanction certain countries, you bully everyone not to use their oil, and I can actually rev up the reserves on my side of things so I get more money for my country. Of course I'd do it. So it makes sense, right? It makes economic sense. But is it good? I don't know. It's good for us.
This is going to be tongue-in-cheek. But is Donald Trump a little smarter than we took him for granted?
Look, Donald Trump is not really dumb, huh?
Evidently. I mean, clearly, the moves he's made have certainly borne fruit. Look, the fact that he cut taxes in the United States with regards to corporates didn't necessarily translate into the best job creation figures, even though I stand corrected in a way that, unemployment does sit at 3.6% now. But they did buy back a whole lot of shares at the same time too, which did
good for shareholders.
Up. Which did ramp things up.
Earnings and a lot of things,
Yeah, so if you increase it in that sense, did that cut in taxes really help the U.S. economy as a whole, including consumers?
I haven't done the maths in terms of trying to understand how much the federal government has taken in tax revenues, but I don't think it actually went down. So it's probably had stayed the same or a bit higher. So which is, in a way, it's just, moving the chips around, but in a good way, because companies get to do more what they love and they pay less in taxes, and shareholders are the ultimate winners.
Yeah. Okay. The earnings season out of the United States as well. 76% of companies on the S&P 500 have now, sent out their quarterly earnings. And initially, we had expected a negative trend with regards to those earnings. Now they're up around 3% on average. It's a really good time in the US.
Of course. I mean, we had the government shut down and everyone was like, the earnings are going to be hit. Just watch out. And unfortunately, it hasn't been like that because that economy is firing.
Or fortunately.
Or fortunately. Because the economy is still firing on all cylinders. And these companies also, majority of them do have earnings outside of the US. So the US is not, the end and the beginning. The US is just part of the earnings. I mean, you look at companies like Nike, Apple, they talk more about offshore. Netflix, they talk about more growth outside of the US than in the US. And I think 2 years ago, you looked at Netflix, it was just only a US story. Now it's like a global story. Now it's a very different company. Some of the people haven't actually heard of Spotify 2 years ago. Spotify is a big company offshore already. So those are just good examples of companies that are beating earnings and, they're doing their fair share to help us shareholders put more money in our pockets.
We can tell where your interests are. Let's talk about Anheuser-Busch InBev very quickly.
Yes.
Their earnings are expected out later today. That's just before the markets open, I think, in the United States, if I'm not mistaken.
I think they're out,
What does that sentiment tell you about the company? And I ask just because they came to South Africa basically
2016,
rushed through that whole SAB Miller story.
Yes.
And we don't know what's kind of happened.
Well, look, they're still responsible for one in every 3 beers. They've increased their volumes by 1.3%, which is slightly, a touch below expectations, which meant their earnings were up 8.2% instead of the 8.9% that everyone was expecting. But, you look at majority of the markets they operate in, it's Brazil, the US, Europe, Asia, Nigeria. They're doing exceptionally well, where volumes where they're going backwards or staying the same is countries like South Africa. So I don't know. I think they're doing very well. What we usually look at in a company that big, which is, grows through acquisitions. You look at, their ability to raise funds, and here they're going to be floating more of their stock in Hong Kong, which is good, and that will help them retire more of their debt. And from the SAB Miller deal, they're getting cost savings of about $100 million per quarter, which is incredible.
Still a behemoth then.
Yeah, still a behemoth, and I think they're able to pay down that debt, which everyone was worried about.
We can only hope. We'll see, though. We will see, right?
And I mean, it's starting to translate in the share price, right? So the share price is slightly moving into the right direction. Maybe it'd be something very interesting to look at if you don't have morals like me.
Bright Kumalo, we won't take that one too harshly on you. Bright Kumalo there, portfolio manager at Vestact Asset Management there, giving us the lowdown on just how the markets have fared. Of course, it has been an interesting time. Some negativity, yes, in the local market, a bit jittery as well ahead of elections, but we'll continue, as I said, more election news coming up right after the short break. Do stay tuned. This is On Point.